Welcome in, everybody. It's going to be the first lecture in the bootcamp series. Today we're going to be going over extremes, which are just protected areas. This is just the word that we formatted in, just to make it easier to talk about. All right, so this is going to kind of explain what they are and how you view an extreme. I've got a couple examples I'm going to show you at the end, but right now you need to understand the criteria used to essentially call an area protected. Right, so you always need two elements. You need an element of time, and you need an element of price. And what this is going to look like most of the time, it's going to be sequential and one of these. And any of these make this higher probability, but sequential kind of needs to be your common denominator. Right, some of these can still work out without sequential, but your trade will always be much higher probability with sequential. So you need to aim to always have sequential when you're viewing a protected area. But essentially, right, you need a combination of two of these. You need one of these and one of these. For example, new week opening gap and a PSP, an area can be protected. True open, true CSD, and a BPR, any of these can be protected. Right, so new week opening gap gives you the fair value aspect of price. Your true opens do the same. Red folder news can also determine a protected area because of the immense volatility coming into the market. Right, it's often going to create a change in state of delivery and not return back to whatever we have at the lows. Now, obviously, you can't execute on that alone, so you need one of these to form with it to have a safer trade, per se. So red folder creates a BPR, that's fine. Red folder creates a breakaway gap, that's fine. And then we have your SSMT. And the reason this is in the time aspect and not the price is because how we view SSMT, right, it's really just SMT at the previous day, session, week, month low, etc., giving you the important liquidity and kind of removing the buzzword from sequential. Right, this is just SMT at a key time. And then obviously you combine that with any of these, you're going to have a protected area most of the time. My favorite examples of this are usually going to always include a new week opening gap and a true open with some sort of sequential. Can even be micro if you have these, right? But then I need to see one of this occur to actually verify the area. And I'm going to show you a little chart example of this, and then I'm going to show you what it actually looks like in candle form, right? So you have your simple schematic, right? This is just basic market structure. You have a range created, right? And then ideally, I don't have it marked out, but this is going to be a previous day session high. We're going to get sequential at this high. Ideally, the sequential is created within a new day or new week opening gap, which this gray bar is going to represent. We're going to get our sequential here, and then we need to see, a true CSD or one of these away from this. Right, so even if this wasn't a true CSD, but we come back up here into OTE, that is acceptable, right? And then how you would really trade this is viewing a protected area does not mean trading the protected area. A much safer entry, which ICT taught this as a low risk buy or sell, will be to look for an entry at this portion of the range, right, in your upper quartile still, but with market structure already in hand, kind of, signaling that we are reaccumulating orders to go back the other way. So one of my favorite entry models is going to be post extreme. We're souping this high, and then we get either sequential again or a true CSD, something off of this. That's going to be the basis of the structure for how we trade here. Right, we need extremes to give us a sense of direction and allow us to kind of work with what the market's giving us and expect it not to return here. Right, so once you have an extreme put in, you would want to see this continue to your draw. that makes this entire portion of the range, post extreme, something to work with, right? Something that is replicable and safe to put into a model. And most of the people in here will not trade if an extreme isn't present. And that's for good reason, obviously. If there's not a clear area that is protected in price, then you essentially have no sense of direction on where things are going to hold or where they're going to go. Right? So when an extreme is formed, then we can begin to look for a new draw. And then take a look at this actual chart example. This is essentially exactly this, but on a chart. Here we have daily cycle between GBP and Euro USD. We get a 15-minute true CSD to combine the time frame alignment with the daily cycle. This all happens below a true open, and then we continue to our draw, which is EQ of this rejection block. And this alone would yield. I personally place my stops at the protected area, which you could choose either this low or this true CSD. Once the true CSD forms, I'm going to always place my stop here most of the time. All right, let's just say we target these highs. This is a safe target. That's 3R. And then a more aggressive target would be either, where this rejection block starts, or EQ of this, which would be around 6R, which I'm not really trying to get in your head with placing trades on this or high risk to reward. I'm just showing you what this usually looks like on the chart. Essentially what this means is that when this area becomes protected, you're going to view the rest of this price action as a potential entry or a continuation into your draw. Right? So for example, it was this gap created that would have given you the safest entry aside from the true CSD. All right. We get daily cycle, true CSD, gap is created, enter at the gap, and then target any of the things I stated above. So go back to this. I would screenshot this just for reference when you're on the charts. This is going to be your bread and butter for identifying where price should not return to, which will then allow you to look ahead and start to begin actually placing a trade. If you have any questions about this, feel free to reach out to me. I know this may be confusing to some of you because of the word extreme or just coming from a different background, but ignore this word for now and just view this as a protected area.